Hey everybody, morning. Try to get my hat the right way there. Got the ghost monster. It's that guava flavored teal color. Delicious. Delicioso. Yeah, let's hope this Santa rally actually kicks into gear. Be nice, wouldn't it? Would be nice. Let's see, we got Don, Opal, Mark, Ted, Arturo, Gary, Sergio, Steve. Yeah, demo F-16. Yeah, that's General. General, good to see you this morning. And Diane, Robert, Scott, Sledge, Mary, Sabina. Good to see everybody. Ronger, Ralph, Piet, Mark. Yeah, good to see everybody. So, limited trading week this week. It is kind of, we got today, normal. Tomorrow, normal. Wednesday, kind of a half day with Christmas Eve. Kind of a half day. It closes at 1 o'clock. So be careful out there. And then Thursday, completely closed for Christmas. Friday, back open, normal. So I'll be here Monday, Tuesday, Wednesday, Friday. And that's 4 trading days this week. You can potentially make some money. Then we're down to 3 next week. Regular 3 days. Monday, Tuesday, Wednesday. Thursday, the market's closed again for the first. Happy New Year 2026 rolling in next week. Then back open on the 2nd for Friday. Golly, man. And I was talking to one of the members over the weekend, and some people are like taking, I'm good, I don't want to trade anymore this year. With 7 days, think about this way. Every 2.5 days is 1% of the trading year. So 7 days is actually almost 3% of the trading year left. You look at it the other way, it's like 97% is gone and no big deal. We're just coasting into the end. But 3%, like if you haven't done what you wanted to do this year, you got 3% left. Whopping 3%. So I'm not gonna quit pushing any day. Like I'm gonna keep at it. Pitter patter, let's keep at her. I like to make the money. I like money. Well, it's not that I need the money. It's just that everybody else that wants me to pay them money seems to need theirs. So yeah, that's seven Nasdaq trades. That's what I'm talking about right there, Sledge. And I've been pushing 12 contracts a day, so that's not chump change anymore. I think I might adjust it and try to push 15 a day. Be like, just at $400. I mean, just at $40 per contract, it's gonna be like $600. I mean, $600, 7 days. That's like $4,200. That's I could use $4,200. I don't know about you. So anyway, the thing I found last night though, when I was digging around, was talking about cable TV, and I saw some pretty shocking statistics. And it just, I knew cable cutting, cord cutting, all that stuff been in the news for years now, and I just, golly, man, people need to put mufflers on things, and I just, this trend has been going on for years, but then I guess it's like slowly at first, and then all of a sudden, as they say, and God, Comcast is projected to lose more clients next year, and so let's just talk about it, right? Welcome to the show. You know, just crazy stuff. Just crazy stuff. Well, you know, I don't know about you, but a rerun of Friends with 18 minutes of commercials for personal injury lawyers and reverse mortgages and all that sort of stuff. And it's crazy, right? And if you still pay for TV like that, the bill that you get on cable or satellite or like that, a glorious itemized bill, you get charged for the triple play Super Max Plus package with 8,000 channels you might never watch, a landline phone that you only ever get calls from telemarketers, and then you have internet speeds that sometimes make a dial-up modem feel like fiber optic. It's kind of crazy the way that the cable companies have treated everybody. You call to complain, you spend 45 minutes navigating phone garbage AI menu thing designed by probably a sadist, only to be told that, if you wanted to remove the underwater basket weaving network from your bill, we're actually going to charge you more. What the heck? Beautiful scam. And, well, most people have kind of caught on to this bullshit. And, we could pour one out for the cable company, but I don't want to waste the monster. Because according to the latest numbers, that beautiful scam is finally gloriously coming to an end. And for us, the savvy investors, the death of cable is creating some potentially monstrous opportunity out there. And those are the commercials during the Friends. Kimberly watches Friends pretty much a lot. Let's just put it that way. And for years, we've talked about cord cutting. It was this slow, steady drip of people leaving cable, right? I mean, we've heard this for years and years now. But the latest data from Nielsen, this is no longer a drip. It's now pretty much a tidal wave. For the first time ever, a streaming service, which is Google's YouTube TV, is now watched by more people than the two biggest cable companies' subscribers combined. Comcast and Spectrum. You combine all of their cable companies, or all their cable clients, customers, whatever. Combine all of their cable subscribers together. YouTube TV now has more than those two combined. Let that sink in for just a minute. YouTube TV has only been around since 2017 as an app, and now has more eyeballs than the two big giants that have been monopolizing the cable industry for decades. How did they let this happen? Think about that. I mean, YouTube TV captured almost 2.4% of all TV viewership in November. Comcast and Spectrum together, a measly 2.1%. It's kind of like finding out that the plucky little startup is now selling more cars than Ford and GM put together. It's kind of a seismic shift in the landscape of cable TV. And the cable companies, they are hemorrhaging customers. Since 2018, the big players have lost nearly 17 million subscribers. That's 40% of their customer base. It's not really a decline, that's a full-blown collapse. And the best part, analysts at Goldman Sachs are basically saying, this is all going to get worse. They've got a big sell rating on stocks like Charter, CHTR. Shocking, I know, but who would have possibly predicted that people wouldn't pay $200 a month for terrible service and a million channels that there's never anything on? So, who's holding the smoking gun? Well, there's two main culprits in the murder of cable TV here. First, you have the new king of the castle here. Google, Alphabet, the parent company of Google, they run YouTube. We're here right now. And here's their genius move. They don't need to make money off of YouTube TV. They can offer it at a very competitive price with all the channels that you'd actually want to watch, an unlimited DVR, and that NFL Sunday ticket thing, because they make a killing everywhere else. They sell ads on this channel, sell ads on your search results, they sell ads on pretty much everything else you do on Google, and even regular YouTube videos like this one. And then the TV streams, they sell ads there too. So the TV service is just the bait to get you deeper into the ecosystem. Watch more YouTube, stay more on the platform. Cable companies can't compete with that. They have one trick: the bloated bundle, and that trick is kind of dying off. So this makes Alphabet a core holding core. Well, it's kind of the king of this new world. They're not just a player; they're pretty much rewriting the rules of the game here, right in front of all the other players. Second, you have the wireless warriors: T-Mobile, TMUS, Verizon, VZ, and AT&T, just T. These are coming from the other half of cable's business, the broadband internet side. They're rolling out something called fixed wireless access, or FWA. It's basically 5G home internet, and it's a direct assault on cable's last remaining cash cow. Kind of crazy. A lot of alliteration there. And in the last quarter alone, these companies have added over 1 million new FWA customers. There are now nearly 15 million American households using FWA, which is fixed wireless. That's just, think of it like a cell phone, except your whole house is hooked to it and it's wireless. Like there's no wires, no cable, there's nothing. It just talks to the local tower. You always get, they can kind of count on that demand always being there for the tower, so they can adjust the tower and the access there. It's interesting. But that's over 12% of the entire broadband market sitting on fixed wireless access. Now, T-Mobile is leading the charge with the fastest speeds, but they're all stealing customers from cable by offering cheaper, easier alternatives. No more waiting for the cable guy to show up for a 6-hour window. You just get a box. You plug it in, you're online. It messes up, you get a new one. This is why Goldman is so bullish on the wireless sector. They're not just phone companies anymore. They're becoming the new internet providers. So if cable's so dead, what about the companies that make the shows? And this is where the story gets a little more interesting. It's a battle between the old guard and the new guard and the up-and-coming guard. So look at Disney. For the last 10 years, their stock has been flatter than a pancake. While S&P 500 was soaring, Disney was stuck in neutral. But they might be finally waking up. Their streaming business, which is losing billions, is now profitable, generating over $1.3 billion in operating income last year. And they still have the ultimate weapon. They still have sports via ESPN, which makes more money for Disney than their entire movie studio lineup and TV business combined. With their new standalone ESPN streaming app, they're finally giving sports fans what they actually want without a cable bundle. Disney's a risky bet, for sure. A real turnaround story, but for the first time in a long time, there's a path forward. And then you have Fox Corporation, FOXA. Well, while everybody was focused on Netflix and Disney, Fox has been quietly crushing it all on their own. Their stock's actually up 36% this year. Why? Because they can focus on what you can't binge watch. Live sports, live news, in a world of endless on-demand content, live events starting to be king. Fox has a lock on this, making them a surprisingly resilient and profitable player in this quite chaotic market. So what's the bottom line here for your portfolio? Kind of simple. You go long the disruptors, Google, new king of TV, T-Mobile, Verizon, AT&T, they're eating cable lunch. And you place your bets on the content kings, Disney, up and turnaround story, and Fox, the quiet contender, slipping in the back door. It's a live content winner. And you run for the hills on traditional cable, Charter, Comcast, CMCSA. Despite owning NBC, their business model is broken. There's no magic dragon coming to save the day. It's kind of broken in a big way. And it's a new era, my morning monsters. Keep the gates open because, well, the gatekeepers have fallen. The power is potentially back in our hands, both as consumers and investors. So do your own research, but might be time to cut the cord, not just on your cable box, but on those dying cable stocks in your portfolio. Be careful. That's all I have for the monologue today. Jumping over. Merry Christmas, everybody. Christmas this week. Happy holidays. Festivus for the rest of us. Kwanzaa, all that good stuff. Hanukkah. What are we on? Day 6 of Hanukkah? And welcome, everybody. So all trading involves a substantial risk of loss. Before we talk about actual trades and positions, past performance not necessarily indicative of future results. If you make trades, you might lose money, is what that means. This presentation is intended to be informational, educational, fun, entertaining, not a recommendation to buy or sell any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries. If you trade them, you might lose money. Keep saying that. I make predictions. I don't have a crystal ball. I got a bag of unicorn dust that I sprinkle on the market, but I try to get it right. Get lucky a lot, but don't always get it right. Don't always get it right. Jumping over, looking at the ES here. Can we pull it out? Can we pull the rabbit out of the hat? We can break out here. Santa rallies on, baby. The only problem here is that we may stall out just slightly higher high. May not be able to crack 7,000 without a deeper retrace to get more energy to go higher. That's where this guy comes into play. If we break higher here, be careful. We can stall out just shy of 7,000, go into a dip into the first part of the next year. And yeah, no bueno, as I say. So this is something to watch. As I was talking about on the calendar, this week, relatively benign. We get some preliminary GDP. This might cause a little bit of chaos tomorrow, depending on if it comes in hot or cold. I think it'll probably come in line, especially since they basically cooked the CPI, took out everything except gasoline and cars, the two that were down. Everything else that looked like it was going up, they took it out of the number. Released it as cooling inflation. Genius move, right? GDP, I assume it's going to come in line or hot because need the numbers to be good, right? Everything's great. Now, I don't know how many people paid attention or even know this. There was a big, we had a Cold War, right? With a great big world power for a lot of years, USSR. And to try to keep up with the United States, to try to outdo the United States, they lied about their production numbers. They lied about their, domestic production, their GDP, they lied. They just lied about everything. And then they started, they got so deep into their own lie that they believed it all. This is kind of like the economic downfall. I took advanced classes in world economic geography in college, and the professor went through all this pretty in depth. It wasn't just like a little 30-second story like I'm giving you right here. How they manufactured all their numbers to the point where they actually started believing it and making projections of what they could do off of their own made-up production numbers and growth. And ultimately that led to a downfall of their entire USSR thing. So the US is playing a very dangerous game here by cooking the books and making the numbers good and telling everybody that we're fine. It can lead to an economic crash, problem that on the scale that we've not seen ever in this country. So it's maybe the unintended consequences of making up numbers to try to make the population believe that everything's still good. So be careful. Like I said, Wednesday, we've got an early close. Thursday, completely closed. Bank holiday around the world. Then Friday, it'll be an odd day because half the world's still closed, but we're going to go ahead and run the stock market right there. So we've got today, tomorrow, half day Wednesday, Friday, 3 days next week. Closed here these 2 Thursdays. Back open on Friday. And we're into 2026 next Friday. Crazy. Crazy, crazy, crazy. Anyway, looks like if you're in the gold trade, that big candle popping us out there. Winter chicken dinner. Beautiful. Bitcoin still struggling here. Really starting to be concerned. This is not this is not the kind of price action that we want to see for bullish price action here. This is starting to be very concerning. This is the kind of stuff that does this. And that breaking down below these lows right here from back in November and early December. Pretty much confirming that we're in crypto winter, which is 10 months of consolidation. It's 10 to 12 months of consolidation in Bitcoin. And this started back here. So somewhere around August, September, October next year, we could expect to wrap up this correction if we're going to confirm it. Now, this doesn't mean that it's just down, down, down and never coming back up at all. We'll probably get a flush here, then we'll get a couple months of coming back up, and then we'll do another flush later in the summer. Not good, not fun, but that's what's cooking right now. If we break down here, now, if we can thread the needle, pop up, blow the 4-year cycle, all that stuff, nice potential going higher. Nice potential, but so far, looking kind of sketchy on crypto. Circling back around to big tech, if we can break out, this has been the resistance right here all month so far. If we could break out, we could push this on up. But it has that pattern that can definitely lead to a lower low. Be careful. Don't get complacent here. Well, I'd loved that the Santa rally kicks off this week, which is, historically, typically see this rally. It's very short-lived, right at the end of the year. We're in the zone for it. Let's see if I can find my chart for it. What did they do? This cool. I don't want the. There we go. There's my pinned messages. It popped up and said, "Hey, you've used Discord a lot this year. Do you want to see all your messages?" I'm like, "No, I don't. I want to get my chart." We're focused on this little pop right here at the end. Zoom her up, pan her over. Just this little pop right here. Now, percent-wise, that's a 2% thing here. So historically, we get about 1.5% roughly. And then it trails off. So watch out. Like this may only last this week. Next 3 days, the 3 days next week might be a little pullback into that new year. So be careful is permacautious. That's always the name of the game here. Permacautious. So it's not like it's just book profits as you get them, basically, is the name of the game. Russell already tagged the targets. We could tag it again and bigger, or possibly even come all the way up here, but I would just expect more resistance right there at that 2600 on Russell. Oil coming back up, probably test the downtrend highs once again. It's been pretty intact for the last, all of October, November, December, 3 months. So we'll see if we test that again. If we do, still opens the door for that lower low down around 50. Gold getting that nice little pop. 44.70 was the resistance there. Kind of expect it to stop in this vicinity and maybe get a little bit deeper retrace. NKD, global liquidity coming back up a little bit. Still not breaking higher. Still has the door open for a bigger flush sitting here. This is a B, and a 1, 2, 3, 4, 5 for the C potential. If global liquidity resumes the downside move, it's absolutely beautiful correction. The US markets and crypto are probably not going to be immune to that. Just keep it in mind. Dollar getting whacked again. And it may or may not be all the retrace. Like, that looks very similar in size to this one we did back over here. And now resuming the downside. After we broke down below 98.5, I was expecting to go lower low than what we did back here in September on the dollar. So watch out for that. Into the new year, probably. We're probably not going to do that like in a couple days. It's probably going to be something that happens over the next couple months. Apple still being soft. If we break down below that uptrend of lows, not good. Amazon. So this is what gives me a little concern here on this rally. Is like Apple, red. Amazon, struggling on the struggle bus here. Downtrend. Google, red. Meta, coming up for the roadmap line test. Couldn't hold it before. Couldn't, this will be the third test here. 1, 2, 3. That can come down here. Microsoft, red. And that's the 1, 2, third test here. Opens the door for lower. This is why I'm very cautious. Nvidia, despite popping, turning red. Tesla might buck the trend and actually go on higher. We've got 500 in the targets there. It's not far away. 550 up here would be the bigger target for this pattern. Doesn't have to play out in any kind of time frame. 550 is where I expect it to go tag. And then we got Netflix also being soft, just kind of sitting here grinding right here. Grinding. Sitting on support. That, when we do that kind of thing, similar to like crypto, might need a dip lower before we can turn around. We definitely got below my target here, so exceeded the downside. I mean, I've been talking about this downside target since we topped out back here in June. And we exceeded it finally. So now we're hunting a bottom. The only problem is the bottom right here on top of this consolidation, or is it at the bottom of the consolidation? I don't know. We had like 95 gainers today. That was things moving $2 or more up in the pre-market. We had 5 decliners, which are things moving $2 or more down in the pre-market. And I usually hunt through those, try to find some opportunities. Look around, see what I can see. And UNF, nice little pop. But that's also a 618 retrace here. And just clear it up. So we have this pullback back here, pop up, try to trigger the upside move, failed. Came back down to the lows. And now we're trying to get something bullish going again. It's just sideways chop. And usually when we see a bunch of this sideways chop, we need a flush out move lower than all the lows here before we can actually go higher. So I'm cautious on that one. GDXU popping on gold going higher. ABVX. Careful, that made a big gap and kept running and probably going to come back to reality a little bit. GE Veranova. That did the bounce, topped out the targets, working on probably coming back to the roadmap line again. SanDisk. Careful, that's got downside. MU, be careful, that's got downside. We fully tagged that 276. I was out of a big position at 200. I was in it all the way down here. Not really caring that I missed anything. 415 if we really get sparky on the upside for MU. App 11 coming on up. Targets at 788. And, you know, just everybody kind of on the same page here. Here's what I got cooking so far, year to date. $48,000. There's my profit. You know, got a nice pop on Friday. Where's the pullbacks? There aren't any. This is, you know, I guess there are some, just little baby pullbacks. You don't hardly see it. It's just booking profit. Trying to book profit every day now. Since October, I started trying to get some profit booked every single day the market's open. Little trades over and over. You can see I did Nike, 18 bucks. Some DJT, 72 bucks. Hims call, 60 bucks. DLTR, that's the pop in that chart right there. And this is my 50K challenge. I'm trying to build this into an account that makes $50,000 a month right there, making 12 this month. So I've got a ways to go. 12 is less than 50. 50 is the goal. 50 is the goal reliable. Like if I hit it 1 month, that doesn't mean it. I need it like over and over and over for like 6 months, at least. Something reliable I can count on, 50K a month. And then this is my public documentation of this. It's not like I'm trying to do this to teach anybody how to do it. I'm just showing everybody that it's possible. You can do this. There's the 1 month. There's the Dollar Tree popping in there. Booking profit, booking profit, booking profit. I haven't had a loser day in like 45 days. I do these little spreads. I'm in the top 50. It's crazy. Top 50 trader right there. On K-Info. And there's thousands of people on here, so it just blows my mind a little bit that I'm up here in the top 50. Blows my mind. That's how I go after the stuff that's high probability. I skip all the stuff that doesn't look high probability to me. SMX, dumpster fire, probably going lower. PPLT. Yeah, man. Going on that run to 200 right there. Physical platinum. Lights. Man, next upside would be 700, but hadn't had a pullback since back here in April. It's probably due. We did rest right there at the 1618. We might do a little more churn here at the 2618, but probably the odds are increasing for a pullback on light. LEU. Sitting here on the roadmap line. TLD, got that pop. Book your profits if you're in it. AGQ coming on up to that next target, 170. Shiny. Lots of gold stuff here. CIEN. Watch out for that to pull back. We haven't been, it's been June since it's getting lofty. Way far away from the roadmap line. While it can run indefinitely, eventually it's going to come back. Like that's just the rules of the game. Eventually it's going to come back. Mul, 2x on MU, XSD. There's the high, here's the low. We kicked off the entry. 372 target on XSD. That's a semiconductor ETF right there. State Street. Coin. Can't seem to get off the mat here. What's interesting is that they have filed to kind of become a brokerage bigger than just crypto. They're going to start getting into the same game as Robinhood. They're going to come for Robinhood and others in the game. So they're going to, Coinbase is going to try to convert themselves into a full-blown brokerage house now that crypto's kind of legitimatized. And they're going to have prediction markets and stuff like that too. So this one could be interesting moving forward. And right now it's just priced with Bitcoin. It pretty much follows Bitcoin. It's pretty tightly correlated to Bitcoin. Line these up a little bit. You know, they're fairly tightly correlated here. So what happens if they decouple and it's more correlated to making money like Robinhood does? It could be interesting if that actually plays out. And we see Coinbase actually get a foothold into the trading market. You know, they're looking at NASDAQ just applied to go 24-hour trading. So Coinbase wants a piece of that. COHR, potential to pull back. SMH, potential to pull back. Also hitting that 1618. Didn't tag the roadmap line. 4-hour chart, 381. We tagged it here. That would leave a 381 target on that 4-hour. Could, if we go up there, tag 381, we could spark off a bigger correction. CLS has this pullback in play. Activate the tool. If we get back above the 326, we can get 379. AVAV. Doesn't seem to have found the bottom yet. Resistance right here at the roadmap line. Support further down. We're kind of back testing this breakout here. We can hold on to it. Higher prices up here. Did have a bigger target up here around 500 for AVAV. MSTR. This is looking ugly. If we can hold on to this higher low, barely a higher low. Barely a higher low. If we can hold on to that higher low right there, we can pull this out. But, and that would project it somewhere up in this 230 area potentially, if we can keep it going. If we fail here, got support at 140, 150, and then down pretty big. Pretty big. This could drop on down to like 60, 70. Yikes. With potential to go on even zeros right there. So looking at the log scale, here's the levels. Potentially 140, 150, which is kind of where we bottom now, and then 120, and then that 60 level. So it's not so good. If not so good. Let's see, Wildan Group didn't hit the roadmap line. Coming back up. That's a 4-hour bounce. Maybe good for 126, but I would be cautious. This can easily turn back down. Oracle still trying to confirm and retest that consolidation here. We did September into this year, dipped, rallied, came back to retest it. If we can hold this and break back higher than the roadmap line, this provides more upside, even in the face of debt and all that stuff. AVGO, hunting for that roadmap touch. Came up just shy. Need just a little bit more. Just a little bit more downside. AEM coming back up. It's a lower high. Be careful. That can still result in a bigger retrace. DSM still hunting the roadmap line. That's kind of the recurring theme here. VRT hit it. Coming back up. If we can get above the 180 area. 212 on the upside. AMD still hunting for the roadmap line. We're seeing the same candle like this in a lot of big tech. Be careful. And we had the biggest OPEX in history on Friday, and that kind of freeing up everything to move a little bit today, but that pop may be limited. We may get more downside. Palladium coming on up into the target, 170. WDC. Got that resistance right up here at 215, 220. Maybe able to get all the way up in there and then watch out for a pullback. There's nothing. Like, it's just straight up, straight up, straight up, straight up, straight up. The pullback's going to be pretty wicked right there. ASTS. There's the bounce. There's the confirmation. 114 is the targets. TER. Watch for that to pull back. STX. Watch for that to pull back. Similar to WDC. WPM. 130 on the upside. AMAT. 285 on the upside. Net. We're going to get back above 226 to set up the target at 273. NEM. Resistance at 111. NBIS. Support here. Look for that two. Look for that 112 break to get 150 on the upside. SIL. Watch for that to come back down. That's getting a little over the skis. Next, I don't know where the next upside would be. Let's see. Guess that was a 4-hour bounce probably. Yeah, 4-hour bounce. So 95. ADEA, just kind of chopping around. Not sure that's going anywhere quickly. Rocket Lab. Holy bananas. I got in this one back here with a 70, 80 call spread. Look for that 82 hit. I think that thing's going to play out right there. Almost can't believe it. Almost can't believe it. So if you don't have a piece of this, you missed it. It's almost at the target there. Wow. ARM is not looking good. Might come back down to 80s, the 80s area there. Lots of leverage stuff showing up. Uklo, not finding a bottom yet. I need that to turn back above, turn back up, get back above the 618, 220 upside. Core weave might be reversing here. That was the target. Like, that was the ABC target. Got it. A, B, C, right in the zone. We got it. I mean, that was beautiful. Touch the 618. This can go higher from here. Could go higher in a pretty big way, too. We could be looking at move up in here. Be careful if we break down back below these lows right here. The downside could be pretty vicious. We could come all the way back down to 34, but this has got us set up for going higher. We need to get through the 618 resistance, which is pretty far up there at this point. Right in there. We got to get through that to go on up here. But the 360 area would be kind of be the target. If we can break through. Yep. That one looks pretty good. If you're willing to take a bet, I wouldn't go big on it or anything like that until it starts really proving it. ALB, Amble Marble, finally testing top of this consolidation. If we get through and hold, that's probably setting us up for the bigger move. Been talking about this for a while, that we could go back up here to 750. If you were brave enough to buy down here at 50, that was a good choice so far. Robinhood. So this is a potential correction here. Now, it did trigger the 163 upside target. Like, that's the pullback. 1, 2, 3, ABC, move up, reach. This is where it gets sketchy, though. Because, see, this could be an A down, a B retrace, and we could get a C down still. So is this a 1, 2, and the 3 comes down? Or is this was this all of, this was the ABC here, and this not be an A, but this be an A, B that went really high, and a C here, and then this be the 1 instead of a B, this be a 1, and this be the 2. I don't know. If that's the case, this 3 pops up, hit targets. If it's not the case, then 3 takes us down here. A little bit of a coin flip. 75% likely we go up 163, but that still doesn't necessarily put us on the big up path. So IREN, that could be the retrace that I was looking for. Kind of was expecting a little bit deeper retrace after potentially doing the 5 up, but this could be it. Like, that could have just retraced right there, and we go on up to 160 on IREN. PDD still have it. 180's been the upside target for a couple years now. All of 24, 25. Still looking for that upside target. Sats potentially topping out at 110. DRD. Yeah, I would be careful chasing this one. We need a bigger retrace. But 41 could be where it's gunning for. Ugly, ultra gold. We still got that ridiculous target up there. DXYZ. Not looking super awesome on that chart. Marvell still has potential that this was a corrective move up. B into this resistance. C can still be down. I've been warning about that. That price action just doesn't look very good for going higher. ANET. Here's the high, here's the low. If we can get back through that 145 area, 173 on the upside. PAAS, watch for the retrace. And VST, below the roadmap line, be careful. Let's see. Decliners, that one turned around. And no idea what that is. That's under the roadmap line, be careful. That reverse splits, it's a giant dumpster fire of a hot mess. Connie, watch for that to drop out. DBVT, and it's a reverse splitter. And dumpster fires galore here on the decliners today. Burlington is set up for an entry potential today. So here's the high, here's the low. Close above the 618, target 306. CPA. Also set up for an entry. Here's the high, here's the low, 132. I guess I can turn on the statistics here. You can see that one doesn't have any meaningful statistics. Burlington also doesn't have any meaningful statistics. HEI. Entry. 344 target. This one, pretty good. Pretty good. That's statistically significant. Has more than 30 trades. 82, better than the average. And 2.8, better than the average. This is a reasonable trade to take right here. Targeting 344. Stop is $1 below the low. Right down there. And HEIA, Series A preferred shares of the same ticker. 269 on the upside here. This one actually performs a little bit better. Doesn't have quite the history, but yeah, it's probably gonna take both of those up. It's a reasonable setup. So kind of look at the bias for the day. Jump back down into the 30-minute time frame here. I would watch out. Like we tagged the all-time high again on ES. Like that. We tagged it and found a little chaos. So if we can break higher, that next upside move. Actually pull it over to low. 69.50 on ES. For cash index, we're not making an all-time high yet. It'd be 69.81 potential if we can break out here. Now the downside potential still elevated. So be careful. Firm and cautious. I'm not gonna count on the center rally being here until it actually shows it's actually gonna do it. Now, my man Jack had a little accident this weekend, so I'm not sure he'll be with me or not at 11:30, but I'll be on Market Masters 11:30. And it also gets simulcast to the Fin Wars YouTube channel, Financial Wars. And otherwise, I'll see you tomorrow. Same bat time, same bat channel, 9:15 tomorrow. Do it all over again. Have a great day, everybody. Be careful out there. The money is, the account you save may be your own. Nobody's watching out for your money more than you are. And if you don't have a strong tie to your money, well, somebody's going to make it into some of their money. Have a great day.